We had the rand trading down to 6.92 on Friday, still around 6.94 to 6.95. At the same time, though, the dollar at a 6-month low against the euro.
Good morning, Stephen. Yes, I think that's a very important point to make, the fact that we've got broad-based dollar weakness going on out there, and I think that's aggravating or exaggerating a rand's strength. If we see the rand against some of the other crosses, we've actually been losing a bit of ground over the past week, which also coincides with quite a significant or a chunky sell in South African bonds. So, the fact is the dollar is weak across the board, and it's really on the back of these growing expectations that the Fed might have to enter into another round of quantitative easing, and that the data that's been coming out of the States hasn't been particularly encouraging.
Of course, it hasn't been dreadful as well, so the economy is not falling off a cliff in the US. We had those ISM numbers out on Friday, which were more or less in line with expectations and still maintaining above that 50 threshold. So it doesn't point to a double dip. Do you think it still really, though, points to quantitative easing?
Yeah, I would agree with that. We don't fall into that camp just yet. We're watching the data flow obviously very closely, and it's not as bad as maybe some people are expecting, but nonetheless I think there's still scope for another round of quantitative easing. The big question though is how much of this quantitative easing has already been priced in, particularly into the US bond market. We suspect that quite a lot, which means that even if they had to enter into another round, I don't know how much relief it's going to actually have at the margin. So that's the key question going forward, but at this stage it seems as though the dollar is going to remain under pressure, provided that the Fed maintains this accommodative stance.
Of course, we had our own manufacturing numbers out on Friday, and PMI also negative, and of course the strong rand at these levels really weighing on the manufacturing sector at this stage. I mean, what options really do the authorities have at this point?
Well, this is it. The rand is very strong, and it's benefiting from huge capital inflows, both in the form of portfolio flows, and more recently now we're starting to see FDI interest starting to perk up. The thing is, for the real economy, it's quite a tough thing to manage with an exchange rate at these kind of levels. We've seen a lot of manufacturers are now starting to, are being basically priced out of the market. Goods are being imported, and that doesn't bode well for job creation. So I think the authorities might need to consider another interest rate cut. It's not our base case scenario, but if the numbers continue to disappoint in sectors that are huge employers, like the manufacturing sector, then the authorities at least might very well need to cut rates again.
Now, of course, we are getting golden forex numbers out later this week. Do you think it's going to indicate that the SARB and the Treasury have been in the markets again, buying up more dollars?
I suspect that's where the risk lies, no doubt about it. The authorities are getting pressure from all corners, domestically as well as internationally, and we've seen it in a number of emerging markets where central banks and authorities are trying to prevent their currencies from strengthening prodigiously, because obviously, much like South Africa, it's hurting the export sector. So I wouldn't be surprised for the authorities to have increased their reserve accumulation. It comes at a cost, but it's an opportunity cost, and the opportunity cost is, of course, what happens to growth and what happens to job creation and the output gap, etc. So I think we will see a little bit more accumulation, even though it is a costly exercise.
Well, Michael, we're getting NAMSA car sale figures out just a little bit later this morning. Of course, we had a particularly strong August. That was boosted, I think, by a little bit of preemptive buying ahead of the new emissions tax. We've also had some strikes in the sector. Would you expect those numbers to start decelerating as we head towards the end of the year?
We do indeed, Stephen. I think the consumer in South Africa is still pretty fragile. He's still paying off debt, deleveraging, etc. And we don't expect him to come out aggressively and buy vehicles. There was some robust buying into the World Cup, and as you say, the emissions tax and factors like that, also some base effects. But I think if we strip out all the noise, we see that the South African consumer is still against the wall, and as a result, he's not going to be buying too many vehicles into year end.